Hi, this is Jack from Alpha Charts with a state of the market update. Today is May 24th, 2020. Before we get started, this is not a recommendation to buy, hold, or sell any stock or security. This is for informational purposes only. I may hold positions in some of the stocks mentioned. Know your time frame and risk tolerance. All right, so we're starting with the SPX as we always do. And we had our eyes on the 50-day moving average right here, a widely watched moving average. And so we were saying as these bars got washed out, we would expect a flattening to curving up, and that is exactly what has happened. So that tells us that the intermediate time frame is now up. So we have short term up, we have intermediate up, and long term is we're still working on that. So I think that's a very positive for the market. Now, this green area right here has been an important area, obviously, in the past, back in 2018, back in 2019. At the end of 2019, it was very, very important. And it's important again here on the way back up. Zooming in a little bit closer, I mean, technically, in my opinion, this is not a decisive break above. So I think it's still in the range. And so, yeah, I do want to see this break above. But I think that the trend right now is obviously higher. And and any pullback, I would think that the 50-day moving average and this consolidation area is area that I'd want to hold, obviously. I would say maybe 27, 25-ish and above. That's the wide consolidation. But right now there's no indication of a pullback, right? Right now there's no indication at all of a pullback. Going to the Qs. Qs has a very rising 50-day moving average, and we are at the top end of this longer term channel. Going back, you see how important this channel has been. That's 2009, right? So this channel is extremely, extremely important. So we're getting kind of to the top end of it. And so could we break this high? Sure, and hit the top end of the channel. This is the place where I'd be very, very cautious, but there's a good bit of room between this area and that area. Somewhere around here, about 7%. So 7% higher-ish, this would create a new high, but would be at the top end of that channel after a huge move. So this would be an area I'd be more concerned with. So I think there is some more potential upside to be had in the Qs, but we're starting to get to the top end of this range, and I think that is an area that I would be more concerned about. But that's someplace in the future, right? All we know is that we have an uptrend, and right now we're making higher highs and higher lows. Boom, 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 boom. Right, so that's an uptrend. Going to the IWM. So the small caps had the double top confirmed and came literally straight down. And now you're seeing a turning of the 50-day, just like in the other averages. Again, not quite as pronounced, but it's there, right? So that means that the trend is now changing from a downtrend, flattened, and now we're starting to go up. So as long as price stays up here, we have to respect the trend. And the trend right now is turning to the upside. A break below this green area, again, going to the weekly, I think a break below this green area, and I think that the test of the bottom is likely, but we're not there. We're not even close to there. We're not testing it. So that shouldn't even be a consideration right now as far as a likely scenario until price, or if price was to roll over, that would change things. But right now, the trend's higher, and we have to respect the trend. Looking at the Dow Jones, we see something very similar to the IWM as far as the 50-day starting to make that hook, starting to move higher. But just like the other averages, even though the 50-day is moving higher, we're not seeing this huge breakout. We're seeing a consolidation again. So the trend is higher. We're getting the hook. So this consolidation, if this is the start of a new bull market, would be higher, right? So the prior trend, according to this, now is higher. So the sideways consolidation that should break out to the upside. If it breaks down, that would be information too. You know, if it breaks below the 50-day, that's information. But as long as we stay above the 50-day, it'll continue to hook higher, and I would expect a breakout at least, you know, to this upper range here. Again, breaking down though, that would be a less likely scenario, and so that would be more. I'd be definitely more cautious for a retest at that point. All right, so looking at the XLF, you know, it's weak, but you know, that's starting to flatten out and starting to curve up too, right? So all these averages have moved sideways long enough to let the 50-day catch up. And this is actually sector. I said averages. XLF, the financials, you know. So even these sectors that have been terrible, and financials have been absolutely terrible, but now maybe we get participation out of them. Again, they don't have to lead, but I think they have to at least participate. And so this is very encouraging. Staying above the $20 range, very encouraging. So that's huge positives. Again, break below $20 or so, and that would change my mind. Looking at semiconductors, you know, just been a really good uptrend. The 50-day is now in a full uptrend here, making higher highs and higher lows, stair stepping up, very similar to the Qs. So, you know, reaching all-time highs isn't that far away. Just looking from here, you know, it's about 10% roughly. So I think that's very likely, or even a breakout. Now that would give us a new level to monitor and to be aware of. I don't think after this run up I'd want to buy that breakout, but I've been wrong because this market has been unbelievably strong as far as what it has been able to do. Nobody, I won't say nobody, most people did not expect this to go straight up, including me. I was expecting some type of retest, especially right here, and it didn't. And that should have been the clue. It went higher. I mean, this bar right here was a serious bar, and it's gone higher ever since. So, you know, just what you think should happen doesn't mean it's going to happen. But SMH, very strong. Again, I think that bodes well for the economy, but also as a trading vehicle and items within SMH. So now those are actual price action. So that's the very positive. That's the important thing. But then we look at some secondary indicators, and one of them is lumber, right? So I like to look at lumber, and lumber, let's go weekly here. You know, this has been an important area for lumber for a long time, and broke down some kind of stage 4 right here, came up, tested this area, and we haven't gotten above it. So as much as price action, which is primary, is still moving higher, you know, lumber isn't confirming that yet. So, you know, this is the area where the secondary indicators aren't confirming the price trend, and only price pays. So we have to respect price more than anything else. But I think we need to be aware of these other indicators. And full disclosure, I'm 85% invested in the market. So I'm playing, you know, I'm going to be in this trend for as long as I can, as long as price is going up. But I am aware that lumber not confirming. It's got to break out above this 50, 52 to 55 area. 54 area. You're seeing the change in trend here, 50-day, but again, we need to see this. We need to see price above 54.50, I think, for lumber to confirm. Looking at the gold, copper futures versus gold futures, same thing, right? So we're seeing this line. Let's go to a weekly again, making this easier to see. So here's your 2009 low in this ratio, and we broke below the low, and now we're consolidating under that low. So if this rolls over, that's your very bearish. But if this can get back above, this ratio gets it back above the green area, I think that this would be super bullish, right? False breakdown, move ahead. If we get below this area, I think that'd be the super bearish. Again, a secondary indicator. And why do we look at copper gold? Well, copper is used in industrials, it's in building and wiring, and it's usually if copper is going higher, that means there's demand, which means that people are working to make houses and build apartment buildings and whatever else, industrial type things. And if gold is outperforming copper, that's a safe haven type of vehicle, and or at least perceived safe haven. And so you would think that people are more cautious and concerned about the economy. So right now, copper is still below, copper gold ratio is still below this area. And until we get above it, again, makes me still a little concerned in the back of my mind. Now, again, this is a secondary ratio, a secondary indicator, right? But it is something that I am watching and have been. Next up, Spx Tlt. And we're going to stay in the weekly chart here. Again, SPX, risk on, TLT, risk off. You look at the ratio, and the direction of this ratio gives you a lot of information. We have come up, and we're retesting this very, very important area, right? I mean, I could even extend this line all the way back to 2007, right? I mean, we could go and say, okay, it's been important since 2007. It was important in 2013. It was important in 2015. And it looks to be important again. So again, this is SPX Tlt. And until we can get above this shaded green area, we probably could even pull that up just a little bit more to about there. Until we get above this area, it still says, maybe we should be a little cautious of that next leg lower. Only price pays, this is secondary, but this is, I think, an important ratio to watch. So looking at bonds, IEI versus HYG. This is a weekly chart again. So we're seeing this, continued downtrend. We haven't taken out this low yet, but we haven't gone higher either. So we'll call this a consolidation area since April. So we'll see what happens here. If we can break lower and go lower and tighten up the spreads of the bonds, that would be very, very positive, right? And we would, and that would be risk on. If this top area gets taken out and we start moving higher, that's a risk off indicator. There hasn't been a signal here since, because we just moved sideways. But that's what I'm watching as far as something, which way it's going to turn. Looking at the put call ratio, I'll do this on a daily. So here's the daily put call ratio. We're in this frothy zone again, right? We kind of exceeded this 0.6 or went below it. And so we'll see how this goes. Again, as you can see here, it was frothy for a while, chopping back and forth in this area before we really went to the other side. But yeah, we're starting to get that excessive bullishness in the market. Again, put call ratio, it's a sentiment indicator. It's a secondary indicator. I do use equity only because I believe that that's a more accurate representation of what's going on. So equity only put call ratio, and this is really, again, starting to get frothy. And so, it is what it is. It's not perfect. Again, we were maybe a little frothy here, right? We got frothy in there, frothy here, frothy here, frothy here, frothy here. And eventually it broke. So something I'm watching. Again, as secondary. Value line geometric index. So this is, again, going back to the weekly chart just to give some context. This area was super important, this 500 level, right? Then coming down to this area, this 400-ish area, 380 to 400 was important, especially back here in 2016. And now we're back above it, right? And we're making new highs. So that's one for the bulls. And so I think this is a very constructive look right here. And this would be confirming new highs in prices, making this new highs in the value line geometric index on a weekly basis. On the daily, you see we haven't quite taken out this level here. So again, that's an area I'm watching, 427-ish. And I think that if we can get above 427, that would be the confirmation that I would really want to see. A rollback below here, 380, and that would be the bearish scenario. So I think that this is the area that I want to watch. So on the weekly, take it out, but on the daily, has not made a new high yet. So there's conflicting information, right? So what do I call this? Sideways grind. And we'll see which way it breaks. Breaks out above 425. And I think that the bulls have the ball and should roll with it. It breaks down, and the bears are back in control. So just to wrap up what I've actually said today. Listen, price is higher. Moving 50-day moving average going higher. I like to look at for what I trade off of. I look at the 65 and the 23. They're crossing. They're moving higher. Everything looks good so far, but we're back to levels of concern, right? Does it mean sell everything? I don't think it does. I think it means, hey, let's just, watch. Let's be cautious. We should always be a little cautious. The 50-day moving average is moving higher. All the moving averages are turning up, or flattening. So I think the secondary indicators haven't confirmed yet, and that's where the caution lies. So we're back to an area of importance, and secondary indicators are not confirming. So we need to be aware, if nothing else. So on a side note, so I don't know if y'all follow Ben on Twitter, but this is Ben. His handle is @patternprofits, and he posted something yesterday about if he was to buy and hold a basket of stocks on January 1st, and not change out anything out of it for 1 year, what would his results have been? And it was an excellent post. So if you can, check him out on his Twitter handle right here. And so it got me thinking, maybe I'm too quick in and out of the market. Maybe position size I'm not doing right. So something that I'm considering is actually taking smaller position size in the 5% range. And I'd like to take around 15% right now, but maybe in the 5% range, and hold longer periods of time. Because when I went back and looked at my focus list and watch lists, I mean, there were so many amazing names that I just never bought because either, I felt they were too extended, or I felt like they were, for whatever reason, not right for me at that moment. And they never came back and gave that good entry for me. So I think that is something that I'm considering changing about my style. And I may do if I do change it, I'll probably just do a new video on my current style of trading. But I'm considering now taking smaller positions, but buying more on my watch list, because sometimes it's too hard to know which exact stock is going to be the next true market leader. Is it Nvidia? Is it AMD? Is it DocuSign, Viva Systems, Coupa, Okta, Avalar, Alteryx, Ring Central, there's so many possibilities on there. Fortinet, Qualys, um, IFI or IPHI, however you say IFI. There's so many. Glue Mobile, right? Bandwidth. There's just too many, and if you have not enough positions, if you do 15%, chances are I'm going to miss some of those other potential true market leaders. So again, something I'm considering to change my the way I allocate my capital. I think I'll keep my um, ins and outs as far as how I sell, at least in a 3-tier system. I think I'm going to continue that because I like that risk management. But anyway, just something I'm pondering. Hope y'all have a good week. Stay safe out there and enjoy the long weekend and Memorial Day. Take care.